Good evening, everyone. Welcome on our webinar, The Mortgage and Real Estate Market in Ontario. My name is Victor Mikhailov, and I'm Marketing Operations Manager at BCU Financial. I'm delighted to be your moderator of today's evening's discussion. And thanks all of you for joining us. And the webinar is going to last for about 45 to 50 minutes. And for those of you who are joining us for the first time, our webinar series began last year and has covered various important financial topics aimed at enhancing financial literacy. For instance, our last webinar conducted in February was focused on registered plans like TFSA, FHSA, RRSP, and you can find the recording of the webinar on our BCU Financial YouTube channel. And this webinar is also being recorded, so you will also be able to see it. And we're excited to continue today's discussion, focusing our key aspects of the Ontario real estate market. So tonight we are privileged to have with us Tim Hudak, CEO of the Ontario Real Estate Association. He will be our first speaker. We are still waiting for him. And Tim has led OREA since 2016 and transforming it into a leading advocate for real estate professionals and home buyers in Ontario. His initiatives have propelled OREA to the forefront of professional associations, providing exceptional conferences, standard forums, leadership training, and guidance to its members. We're also joined by Sviatoslav Polyakov, Senior Financial Service Officer at BCU Financial. And Sviatoslav will guide us on how to apply for a mortgage and what the general criteria are. So right now we are waiting for Tim.
Yes, we'll talk about the mortgages, generally what type of mortgages they're out there. Maybe a little bit some useful formulas, very basic stuff to see how to calculate for what amount you can qualify. I will give you just our general guidelines. How do we approach mortgages? How do we approach our members who want to get the mortgage? And obviously, the most interesting part is answering your questions. So yes, I'll try to do my best and to cover everything. And yes, I'm also very interested to hear what's Tim's overview of the current market in Ontario. We all know the changes that happened last year with a steep increase in rates, how that affected the sales, how that affected the affordability of the mortgage. Obviously, that's one of the very important questions that I've been answering. Also, the outlooks of the interest rates, how they are going to be behaving soon, which actually we don't know. The idea was that the rates by this time of the year should be going down, but we don't see that move yet. I guess the inflation numbers are not there yet, and the government is still keeping I mean, the Bank of Canada and the Federal Reserve is keeping the rates quite high, but the first bank that dropped the rates a few weeks ago, it was the Swiss National Bank. So they dropped it 25 basis points, and we're waiting for the response from the other central banks. What's going to happen? We don't know yet. Don't expect a dramatic drop in the rates. That probably is not going to be happening. It's going to be gradual move, if the move is going to be happening. But as I was saying, the inflation numbers are not there yet.
Let's start with your presentation, and then as soon as Tim is ready, then he will.
Sure. That's great. No problem.
Okay. So in this case, I start sharing the presentation which you have prepared for this event. Okay.
Okay.
Hang on. Yeah. Here we go.
All right, as I was saying, so we just gonna generally talk about the mortgages and the type of mortgages. So generally, we have a conventional mortgages and insured or so-called high ratio mortgage. What that means, conventional mortgage is the mortgage where you come up with at least 20% down payment. The next slide, please. Okay, Victor. Okay, and the next type of mortgage is our high ratio mortgage. That's where you come up with less than 20% and as little as 5% of the down payment. So that's the big difference. With the high ratio mortgages, those mortgages, they must be insured. Usually we work with Sagin. That's the company that insures the mortgages in Canada, or CMHC. Um, this is the government agency, government body that also insures the mortgages. Their products are very similar, and the guidelines are pretty much the same. Yes, with the conventional, there's no difference for us. We will take into consideration the conventional types. There is no preference. We usually look at them pretty much the same. The next slide, please. All right, so there is few things to note about the high ratio mortgages. The property value must not exceed $1 million. So basically, purchase and sale agreement, if you're buying the high ratio mortgage, the purchase and sale agreement purchase price should not exceed $1 million. This is like a little bit of a tricky part. So the 5% down payment is required for the first half of that $1 million, for the first 500,000 of the property value, and then additional 10% is for the second 500,000 up to basically $1 million. So for a first 500,000, and let's say it's 5%, and then let's say your purchase price is 700,000, you will require for that part, the $200,000, you will require to put 10% down instead of 5. Okay, with a 5% down payment towards the purchase of a new home, the borrower's insurance premium will be around 4%. So this is again the same price for the CMHC or Sagin. The mortgage insurance premiums, they're added to the mortgage amount. So you basically finance the premiums of that insurance, and we add them to your overall mortgage amount. and we spread it throughout the amortization of your mortgage. The only thing that you will have to come up with your own money is the taxes on the premiums. Other than that, with the insured mortgage, you don't even have to pay for the appraisal. So that's sometimes something to consider. So it will save you some money on the appraisal, but again, you'll have to add the insurance premiums to the mortgage amount. But again, you're saving on the amount of down payment and on the cost of the appraisal. So Victor, next slide, please. So now we're going to go to the mortgage application. What we're looking first, we want to see a history of our members. Sometimes the members are coming up to me and they're asking, how can I build the credit? What is required from me? What increases the chances of me getting the mortgage? How do you evaluate the customer? Basically, we like to have as much relationship with our members as possible. Start with opening the account with us. Bring us your direct deposits, your paychecks. Make the deposits into your checking account. We will see the history of your salary payments that are going to your account. We definitely can help you out with a credit card, also to build your credit. But generally, we want to see as much relationship as possible with the client. You need to have a down payment money. Start some investment with us. Maybe a JSE is a good idea. We were talking about our previous seminars about how you can use certain registered tools like RSPs or first time home buyer savings plan. That is a new product that was introduced. So all these things should be with us. We like to see them with us. It's not a requirement, but we want to see as much as possible, of products with BCU, so we can properly evaluate the customer. So to obtain the mortgage, you will need to first get, obviously, purchase and sale agreement. We have to see that you're actually buying something. The copy of the feature sheet means maybe an MLS listing of the property. Obviously, verification of the down. Yes.
Sorry, may I interrupt you on this point, please?
No problem. No problem.
Because we have Tim here.
Excellent.
Tim, can you hear us?
Yes, I had trouble getting in. I do apologize, Victor. Thank you for the help.
Well, we are trying to juggle and solve the problem, so everything worked. That's very good. I'm happy about that. So, Svetoslav, you will continue after
Sure.
Tim, then, okay, with the presentation.
No worries.
And Tim, the floor is yours.
Super, Svetoslav. I'm sorry about that.
No problem.
Sorry to interrupt
Absolutely.
you. You were on a good roll there. I was learning lots of stuff about mortgages. And Victor and everybody here, I do apologize. We had trouble getting in, so I'm sorry you had trouble with the registration. But I'm glad to be back. Thank you very much for inviting me to talk about the state of the housing market, some of the decisions that governments are making that I am optimistic that will mean, if they are implemented, that we can get more homes that average hardworking Canadians can finally afford. But there's also some danger signs that could make things worse. And Victor, if you want, I'd have to take some questions afterwards as well. So let me share my screen here. So how's the day going, Victor?
Everything is fine.
Until I showed up.
No, everything is absolutely fine. So those technical issues, they can be a factor. That's fine. We have unlimited time. Yep, I have
You
it.
got her?
Yeah. Okay. Let me just open it full screen. Okay. Okay, I'm gonna share it. Here we go. As soon as you
Excellent.
need me to change the slide, just tell me.
You bet. Well, Greg, be back at BCU Financial to talk about the affordability crisis and how, since I was here last year, it actually has become worse. But I'm confident there's some positive signs on the horizon. Go ahead. So, as was said in The Wizard of Oz by Judy Garland, there is no place like home. Next slide. Home is a place of our greatest dreams. It is our best investment. It's where we raise our families. And it's also the place where we feel most safe and comfortable. But sadly, that Canadian dream of homeownership is in jeopardy. So here's what has happened with the cost of the home over the last 7 years or so. It was kind of steadily rising, but well within reason through 17, 18. And then you see COVID hit there in March 2020. It took a dip in April when the world slows down. And then look, it's like climbing Mount Everest. It went from under 600,000 to over $1 million. And that, Victor, is the average price of a home in Ontario. That's not just Toronto. That's average in Ontario. Since then, interest rates went up and things cooled down, but you're seeing we're starting to climb again. So what does that mean? Well, the last 7 years, housing prices have gone up 32%, and they're starting to move up again. Next slide. And here's a breakdown for different regions of the province where you may have members. So you've still seen year on year in the last 6 years, a significant increase in prices. And, it's not really necessarily Toronto that has the highest impact. Some of the regions have had bigger impacts as well. So if you're in a big city, small town, Northern Ontario, the results are the same. Home ownership is slipping further and further out of reach for average hardworking Ontario residents. Next slide. So why is that the case? Well, really, in a nutshell, we stopped building. We should have been building about 100,000 homes per year to keep up with population growth, immigration, and the fact that millennials were coming of age, having kids, getting promoted, getting good jobs, and looking for a home. But look at that. For that 20 years there, we underperformed, building far under that goal of 100,000 homes a year. So that's why we're in such a hole, because we didn't build for 2 decades. We actually built more homes in the 1970s, for goodness sakes, than we did in the 2000s. Bright spot, 2021, we actually hit that target. That's the most homes built in over 30 years. 22 and 23 were next best. And 23 slipped a little bit because building slowed down with higher interest rates. I'll talk about more of that momentarily. So let's move forward. So what happened? Well, we increased red tape. We made it more bureaucratic. In some parts of the province, it takes 10 years. Oh, we're not seeing the slides? I saw a message come across, Victor, they weren't seeing the slides.
I can see everything fine.
All right, perfect. So, and red tape ran amok. Here's an example. This is in Toronto. So there's a building that's being built, 844 units, 257 were designated as affordable. It would have made a difference for many families there. But some outdated red tape found that there's a shadow, get this, between noon and 1 p.m. only, 2 days of the year, the spring and fall equinox. So you had a 6.5% shadow on that park there. And then the city, because of these outdated rules, said you couldn't build that many because of that shadow. Victor, no kidding, 2 days a year. The result, they lost 74 units and 26 affordable units, and construction has been delayed. What else happened? Well, millennials have come of age, so there's more demand in the marketplace. Next slide. They're in their natural years raising families. And then next page, we had rapid immigration. Now, we need immigration. Look, I mean, I'm speaking to people of Ukrainian descent here. Ukrainians helped to build this country. It's a proud part of our history. We need to have more talented immigrants to help build our infrastructure, to make new businesses, to invest, because we're not having enough children to keep up, to support our programs. However, our immigration was exceeding our targets, of our most aggressive targets, many going through backdoor means by going to schools that weren't really good quality schools just to claim immigration status, special work permits, and refugee status. So we had huge pressure due to immigration. Next page. And government really lost the plot when it comes to housing supply. They got focused on other areas, built up more walls, slowed down the process, increased taxes and fees. So government just lost track and we fell behind. And then what happened next slide is NIMBYism. NIMBY stands for not in my backyard, had become so strong and powered by social media that it's difficult to get anything built. In fact, NIMBYism has become so strong, next slide, I call it bananas. It's become so strong, it means build absolutely nothing anywhere near anyone. There is so much resistance to new housing. Local councillors vote against it. It gets turned down, delayed, and more expensive. Here's my solution, next page, to bananas, beer. Everything goes right with beer, right? Especially at this time of night if your slide deck's not working. So build everything everywhere rapidly. Next page, if we don't act, there are consequences. Next page, we're risking a brain drain. If we can't get affordable homes for our millennial population, by the way, the most educated population in Canada's history, they'll leave to other provinces, to other states. We actually polled on this, and we found that almost half of people looking and searching for homes under 45 consider moving to another province simply to afford a home. Late last year, we found a significant percent of non-homeowners are pessimistic about their ability to buy a home, and 32% gave up entirely. If we don't act, we risk losing that talented next generation of job creators and entrepreneurs. And there's more inequality as a result. While the average homeownership rate in Ontario is about 68% of adults own a home, 43% of Black Canadians own a home, Indigenous population 50%, so in LGBTQ at 47%. So this is an impact we're seeing in communities that already are having difficulty getting into home ownership. Here's the good news. The Ontario Real Estate Association, the hardworking realtors, maybe some on this call, in every big city, small town in Northern Ontario, are working hard every day for men, women, families to help them get a home or expand their home, but also to make a difference at our capital at Queen's Park to get more homes built than people can actually afford for a change. Here's the good news. We've actually had 6 pieces of legislation move forward under the Doug Ford government, showing a real commitment to home ownership and quality rentals. So there's a list. Victor, feel free to share this with the audience. We won't get in all the details. We can go to the next page. But we're seeing progress in legislation that is starting to pay off in those numbers I showed you. The Ontario Real Estate Association, where I'm the CEO, we did an analysis of the Housing Affordability Task Force. That was a group that Premier Ford set up. I had the honor of sitting on that to put a path and give recommendations on how we can actually improve home ownership. The good news is 76% of our recommendations from 2 years ago are either fully implemented or in progress. That's good. But there's still 13 recommendations of the 55 where they've not made progress. So let me tell you some areas where we can get this fixed. Next slide. Reforming Ontario's Land Tribunal. That's sort of the court for housing disputes when a municipality, developer, or neighbors get into a fight. Fix that to eliminate abuse, eliminate the backlog, allow fines for unreasonable delays, change land use zoning changes to end exclusionary zoning. I'll tell you what that means. So let's picture that wartime bungalow, whether it's in Etobicoke, in East York, or in Oshawa. And right now you can tear down that wartime bungalow and you can build a 4-story monster home. And that's your right. We support that. You've worked hard for your money. You're providing for your family. You can build up. But if you knock that home down and you want to put up a duplex or a triplex or 4 stacked townhouses, you run into this regulatory ringer and red tape, and it gets delayed. And eventually the homeowner throws up her hands and walks away. Those homes don't get built. And who loses out? Well, it's those 3 or 4 families who cannot get into the market. Modernized zoning is number 3 to support commercial residential conversions. streamline the development process, allow water and wastewater services to be funded over time by users and amortized over, say, 40 years. That's how we do electricity, how we do natural gas. If we did that, Victor, for water and sewer, that would lower the cost of homes $50,000 to $60,000 right there in the GTA. And abolish the land transfer tax. If you can't abolish it, at least reduce it. That is a barrier to movement. It's money you have to have in hand. That hurts home ownership as well. Next page. Here are a few more ideas that we put on the table of our 10. Again, you can look at this document later and see if you like those, but includes more skilled tradespeople to help build the homes that we need. All right, some recent legislation on the next page. Cutting Red Tape to Build More Homes Act. These just came out last week. New financing models for water and wastewater. We like that. You saw them on the previous page. Permitting mass timber structures up to 18 stories. You can build that more quickly, better for the environment, and supporting standardized design. So if a home is a provincial standard, it's a much faster approval process. Municipalities is kind of like pre-approved. All right, on the next page, we also want to see more progress on modular construction. So I don't have to go into all the details here, but in a nutshell, progress made in all these pieces of legislation, but more needs to be done. All right, next page. We also have to fight for fair housing. We want to make sure that everyone, no matter what your religion, no matter what you look like, who you love, everybody should have a fair chance of affording a home. And we need to eliminate any kind of bias in the system. We have a full report on that. The other thing we brought forward is the top 10 infrastructure projects. We need to invest in these projects to actually create new areas for job creation, investment, and new homes. I hope the province will listen to those suggestions, a lot of them around transportation improvements. And then we can't forget Ontario small towns. It's where I come from in Niagara. So the next page will tell you a bit about a report we did, small towns, big opportunities, and how we're going to have growth in our big cities as well as our small towns. The bottom line on the next slide, Victor, the future of home ownership is at risk in Ontario. The fact that we have homes to invest in, to raise your family, has made us an envy of the world. It's a strength of our middle class. I know when my grandparents came here from what was then Czechoslovakia, Slovak background, one of the first things they did was put every penny they could into buying a home. They renovated upstairs, and that was a rental unit so they could help pay down the mortgage. This has been a great part of Canadian society that no matter where you came from, you could get a home. And year after year, generation to generation, you had a better shot at owning a home than the generation before. And I know when I got my first home in Niagara in 2002, it changed me as a man. I cared more about my neighbors. I volunteered in the community. I invested back into my home. I took pride in it. And if we water those things down, it would help weaken the structure, the strength of our middle class. We need to turn things around and help create more homeowners that next generation. Next slide. So number one thing for governments to be focused on in this affordability crisis, urgently build the housing and infrastructure to benefit the future of Ontario. Next slide. Realtors in Ontario have been doing this, and we ask you to join in this fight with the ideas we presented here today to get shovels in the ground and then keys in the hands of hardworking Ontario families, or that millennial student who went to U of T or Brock University, did everything her parents told her, got a good job, but still stuck in her parents' basement. That's who we're fighting for each and every day to get more homes built. I hope you join with this. And then I thought I would throw this up there, Victor, the next slide. My heart is with the Ukrainian Canadians and folks back in the old country. I was proud of my time in politics to stand with Ukraine, to fight for democracy and independence, and I will always be there with you in whatever capacity. I think it's just absolutely tragic what is happening there today. So it was always an honor to be invited back to BSU today, and I continue to stand with my friends of Ukrainian heritage. Folks, here are my contacts as well, if I can ever be of any service. On the next slide, let's make sure we stay connected in the time ahead. So Victor, we can pull that down. Feel free to share that with any of the viewers here today or other members of the credit union. Again, I apologize for coming in late, but I really appreciate being here at BCU Financial once again. And I know you've got other guest speakers. If you want me to answer any questions, I'm happy to do so. Otherwise, thank you for having me back. Yeah,
thank you so much, Tim, for the presentation and for the it's very interesting topic, especially for newcomers who are thinking of getting their first homes here in Ontario. If anyone has questions, please raise their hands or write in the chat, and I will read them out. And let's find some questions, because the topic is very interesting. For me, I watched statistics. I looked statistics of the cost of houses comparing with annual income, and for me, it's like an interesting question. I'm not sure if it's related to to your activity in OREA, but still, in 80s, the average price of a house was 1.5 of annual salary of a household. Now it is around 10 annual. Yeah, so that's quite the difference. And how do you think people will afford buying those houses if the trend continues with prices?
They really can't, Victor. They really can't. What ends up happening then is that people who look, if you already own a home, it helps to finance an additional home, so you'll have more people owning more homes, and it's harder to get into the marketplace. If you come from a family that's doing really well, they're a wealthy family, or you can, what we call the bank of mom and dad, you tap into them, then you've got a shot at getting into the marketplace. But if you come from your, a new Canadian, or you come from a family of renters, modest incomes, it is really impossible to get into the market anywhere in the areas that I showed you. So we really need, number one, focus on getting more homes built, particularly for first-time home buyers to get in the market. And Victor, also financing mechanisms to help people out. By way of example, we lobbied for longer amortization periods. I'm talking to a credit union here, so you know all about that. So we want to see the 30-year amortizations. But Victor, they should be for everyone. The government in their budget this week, so they would do that, but only for first-time buyers, only buying new homes, and only if it's $1 million or less. It's a very small part of the market. They should allow the 30-year amortizations for any buyers who qualify, buying a resale or a new home. I can see you're nodding and you agree. And I wrote a column too, and I could send this to you as well, just as in the paper today in the Toronto Sun and across Sun Media. Interest rates need to come down. They've been too high, too long. Inflation is now in the target area. And if you take out rental payments and mortgages out of the inflation measure, the way it used to be pre-2017, I think, we're actually down around 2% or lower in inflation. It's become a stranglehold on the pocketbooks of families, and it takes home ownership away. So I gave you a long answer there, but more supply and also mechanisms to help finance the homes, including lowering interest rates.
Okay, got it. Thank you so much. Are there any programs for encouraging people building as far as I remember, they're called garden suites, right? Like the small house on the backyard or somewhere to rent it out for newcomers, let's say, or for those who want to rent them. Do you know if any programs like that are on the market or?
Yeah. So number one, that was something that we had pushed for. So I'm happy to see that in the city of Toronto. We would like to see that ability to be province-wide, to use existing properties for more homes. It's progress. There was an announcement in the federal budget, Victor, yesterday. We're trying to get more details on it, but a low-interest loan program, I think it was a 1% loan, to renovate homes to become secondary suites, so that's attics above the garage. And I would think that garden suites should qualify for that. But maybe we could follow up as we get more information, because the news is just fresh as of yesterday.
Mm-hmm. Interesting.
Hopefully so.
So guys, do you have any questions? If not, we will let Tim go, and you will not be able to answer ask any questions.
Oh, Victor, thanks for having me back.
Yeah,
Continued
thank you.
success at BCU, and again, I'm sorry the fumble out of the gate. It was nice you to have me back. And Svetoslav, thank you for being here too. Sorry to interrupt, and I know folks look forward to you continue your presentation. Everybody have a good night.
Thank you so much.
Thank you very much for coming.
We continue with our webinar, and thank you for joining us and for the presentation. Thank you so much.
My pleasure. Hope to see you soon. Take care.
Bye. Okay, so Svetoslav, you can switch on your camera and the mic. So let's get back to the
mortgages.
To the presentation. Okay. Hang on. Okay, I'm sharing the presentation and let's go.
Okay, maybe one more down. Okay, let's stay here. So basically, there are two pillars when it comes to evaluating our members in terms of whether they can get a mortgage or not. The first and the most important one is the income, and the second one is the credit history. So obviously, you have to have a good credit history, a good credit score, and you have to be able to afford the mortgage payments. So that's the most important thing. So if you have some hiccups before, like on your credit, if nothing is substantial, if there's no bankruptcies, we definitely we need to have, first of all, a good explanation to that. We can definitely can take a look and evaluate the whole picture when it comes to the your credit report. I would say the minimum credit score should be at least 650, and we need to know why it's 650. The second most important part is, of course, income. The amount of income will determine the amount of mortgage that you can get at the end. So, as I was saying before, of course, we need to see your down payment. Your down payment will determine what kind of mortgage you can get, whether it's going to be a 20% down payment, just a regular mortgage, conventional mortgage, or it has to be insured or high ratio mortgage. That would be that. So for income verification, obviously we need to see your employment letter, we need to see your pay stubs, we need to see your T4 slips, personal tax return, notices of assessment. Personal tax return will show us details of how you earn your income. What do you, if you're writing off something, how do you writing off? Are you self-employed, or you're working for somebody? If you're getting T4 slip, so all these details, definitely this is something that we can discuss in our personal meetings. And every mortgage is different. Every mortgage is different. Everybody has a different situation. Everybody's family could be different. You know, sometimes there's a maternity leave. There's 1 year that if you're self-employed, you made less. We saw some like that in the COVID times. So people were making less money. On the other hand, I had people who were making much more money during the COVID. So it's an analysis, and definitely we have to meet up and discuss your current situation. So the next slide, Victor, please. So this is basic calculation of how much, like for yourself, how much money, what's the amount of mortgage that you can qualify for. So there's two ratios. The one called GDSR, it's a gross debt service ratio, and TDSR, it's a total debt service ratio. So what do they mean? The first one, we have to evaluate your housing cost. Your housing cost consists of your mortgage payment, your principal and interest, plus your property tax, and plus your heating. If you have a condominium, we'll include a condominium there. And what is the relation? How much are you paying for your housing in relation to your income? So your GDSR should not exceed 39%. So your housing payment compared to your income should not exceed 39%. And then we have a second ratio, the TDSR. It's your housing plus whatever else do you have in terms of your debts. It could be a car loan, it could be a large credit card, other loans, student loans. We have to include all your other obligations, and altogether your housing and your other loans, they should not exceed 44% of your income. So this is the basic ratios. This is the same basically for all the financial institutions, whether it's a credit union or a bank. We look at this pretty much the same. So the more the income that you have, the larger the amount of mortgage that you can afford. So this is sort of like easy part to understand, but the hard part is as Tim mentioned, the affordability is extremely tight in current environment. So there is few ways to fix it. It's either you come up with a obviously larger down payment, which will decrease the amount of mortgage that you need, or you have to increase the amount of income. And a realistic way of doing this is to add as many people to the mortgage as you can. So it's usually it used to be husband and wife, but now we see the situation where it's friends and family sometimes, like, who are helping out in terms of going on a mortgage and increasing that income part of the equation. Victor, next slide, please. All right, so now we're going to talk about why we're the best mortgage providers out there. Well, first of all, it's a quick turnaround. It's huge. For the banks, because of their large bureaucracy and their large structure, you need weeks and weeks for the mortgage to be arranged. I had a personal experience with that, so I can I saw this from inside of the bank, and I can definitely understand how it works with us, because we're smaller. We know our members. That's why I started with encouraging you to start with us as soon as possible. So we see your history, we see your salary coming in, we see your investments, we see your family, we see your relationships. Like everything helps to provide like super fast service to you. We have great relationships with our appraisals, with our appraisers, with our lawyers. For many years, we've been working with them forever, basically, and that really deletes the barriers. Like sometimes, with a appraiser can take a long time to appraise. With our appraisers, doesn't happen. All the lawyers, they know our system, they know how we work, they know our documentation, they know everything. It's very easy for them, and they can provide also a very fast service. Personalized approach. We always look into your current situation. So we as I was saying before, for us, we see the picture. We see the picture. We see what you need, and we're trying to help you out in the most efficient way possible. Obviously, our main advantage, we can discuss these details in English and in Ukrainian. For a lot of newcomers, all these details, we're not trying to use the jargon words, all the specific professional stuff that kind of like hard to understand. It's always plain English or plain Ukrainian. We try to explain it as best as we can. Hands-on approach. As I was saying, yes, every mortgage application is different. Every family situation is different. We have to see a bigger picture. We have to look at certain things at a certain angle. We understand that not everybody is the same. We cannot have this like cookie cutter approach to our members. We look into your overall situation. We need to your specific needs, and exactly maybe help you out and maybe help you to build a strategy how to get to that mortgage. Maybe you're doing something wrong, and we can give you an advice. Maybe how to better invest money for that down payment to make it happen faster. Like how to use different tools, how to use the different register plans to get to that goal of getting that down payment money. So this is what we do every day. And obviously, the rates, we're trying to get the best rates that we can. We definitely take a look into every application and try to squeeze, as much as possible in terms of lowering the rates and be competitive as much as we can. So the next slide, please. I guess now it's the most interesting part. It's Q&A. I will try to answer all your questions. One more and very important thing before the Q&A. It's also a very good idea, like if you have any questions, to set up an appointment with one of our financial services representatives. We have an option on our website to use our new system. It's online based. You can see our slots when we are available. It's very straightforward, very easy to use, and it's also very useful to me. Because
let me show.
yes.
Sorry, let me jump in here. So if you want to make an appointment with some of our FSOs, you can just go on our website, bcufinancial.com, then join now and book an appointment here. And then you get to the calendar. You can choose the topic, choose the date, time, or you can meet online, you can meet offline, so you can choose whatever is convenient for you.
Yes, it's a very good system, and we had an excellent feedback from the members, and also from our workers, from the financial services officers. It makes our life easier, and it makes your life easier as well, so we can spend as much time as possible with you, and we'll try to answer all the questions.
Okay,
so
guys, go ahead with questions, please. Write them in the chat or just raise your hand and I will unmute you and let you speak. Not that many questions. Okay. Okay.
Don't be
So-
shy, guys. There is no bad questions. It's always, yes. Mortgages, we can talk about them all
I will
day,
ask
every day.
provocative question to you,
Please.
Svetoslav. So, for instance, if a person doesn't have a permanent residence status,
Yes.
are there any limitations for him to buy a property, and what, like, can you explain a little bit on this?
Yes, there is a program that we can use in high ratio mortgages. It's called a newcomer program. Yes, you have there are certain aspects of that deal that we have to take a look. First and foremost, it's your income. That's the most important thing for yourself, and you have to show that you can afford and sustain that mortgage. That's one of the most important things. Again, different situations with the different people. We will, as I was saying, we will definitely take a look in your in whatever is your current circumstances, and we'll try to find a solution for you. Yes, there is a ways of arranging such mortgage. And there is a ways of protecting us. So especially with a high ratio deals, you don't have to come up with a large down payment, and we can use the Sagino CMHC to help you out and get the dream home. Absolutely.
Okay, thank you, Svetoslav, and it seems that there is no questions. So I would like to thank everyone once again for joining us today, and we hope you find this webinar informative. We will upload it on our YouTube channel and send you the link for the video so that you can just go look through it once again and find something that maybe you missed during the presentation. So feel free to reach out to contact your financial service officers or member service representatives and to find out more about mortgages and other products. On that note, I'd like to wish you have a great night and see you on our next webinars. Thank you so much, Svetoslav, for presenting today. Thank you.
Thank you, everybody, for joining in. Thank you. Have a great night. Bye-bye.
Bye-bye.